Good morning, ladies and gentlemen. I have a little bit of iced coffee in a ball jar here. Freshly French pressed yesterday. And put in the fridge for today. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. And yes, today is a little interesting because we do have the announcement supposedly for the RTX 4090 coming here probably about 15 minutes into the show. So I'm not sure how we're going to handle this quite yet. Those Nvidia panels can be quite boring. So just watching that entire thing with the stream, I think, is not beneficial. I think we'll wrap back around to it near the end of the show and see what got announced. That being said, the rest of the show, we have some very important stuff. I've been saying this since the merge. What we have seen with the merge and the move to proof of stake for Ethereum means that Ethereum is classified as a security. That is becoming clear and more clear according to the SEC. And now the SEC is, of course, saying that the U.S. government basically has jurisdiction over the entire Ethereum network, which is another thing that we've been preaching since the very beginning, and nobody wants to listen. I know you guys listen. We got the smart people here that are paying attention, but it does feel like a majority of the cryptocurrency space is not paying attention. This is a big deal, guys. We're going to be talking about that primarily. I do have an interesting story time article about how the tech elite plan to escape the apocalypse of its own making. If we have enough time, we'll get to this. It is based on a new book that I actually just picked up. I have not started listening to or reading yet, called Survival of the Richest: Escape Fantasies of the Tech Billionaires. Of course, when we talk about tech billionaires, I suppose we're talking about, the Bill Gates and such, the Mark Zuckerbergs and everybody involved. How will they escape the tech-pocalypse? It's an interesting book. It's an interesting title. So I figured we could cover a little bit of the premise of it if you guys are interested near the end, if we have some time. Binance is completing the distribution of Ethereum proof of work tokens, so we will be seeing those hit. Now, of course, keep in mind, this is extremely confusing because not only do we have ETHW, which is Chandler Go's project, but we also have Ethereum Fair, which is the other guy, Justin Sun, right? So now we have essentially two ETH proof of work forks, one being called Ethereum Fair and one being called Ethereum Proof of Work, or ETHW for short. And Binance is showing support for ETHW. Quite frustrating that, we get all this cool support right off the bat for basically scam coins, but they won't support, projects that have been around and shown that they are, sticking around and actually doing good work, like Flux, Ergo. Raven coin's been around for a long time. There could be an argument for that. But no, we're just going to go with some scam coin that was, meant to steal people's money. It's very frustrating. Being in this industry right now, I think, can be extremely frustrating. So hopefully you guys share in my frustration as we read through some of this stuff. But who's still bullish? MicroStrategy. Michael Saylor over here, he's extremely bullish. We'll be talking about that. And we also have some very bullish moves from Bitcoin miners as well. So mining is not dead. Proof of work is not dead. Now, we could maybe make an argument that we have slowed down and paused on the proof of work side of things for GPU mining. But, there is still the argument that at the end of the day, we have access to a bunch of other cool stuff like spec mineable coins and stuff that the ASIC miners do not have access to. So there's all that. Let's get into all of it and more right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Boom, and welcome back, ladies and gentlemen, boys and girls. So first of all, we do have the special broadcast coming from GTC from Mr. Jensen. Now, this is going to be a keynote speech. The expectation is that an RTX 4090 will be basically announced at this time. It's supposed to premiere in 3 minutes, so I don't think we'll actually watch the whole thing. I think what we'll do is come back near the end of the show and we'll skip through and find whatever information on the RTX 4090 that we can. Of course, chat, I'm sure some of you guys will be keeping it up in the background so you can give us the cliff notes if we do get an announcement on the 4090 and what those dates will be. So that is coming out right now. You can check the description for links to it. And of course, I'll link the link over here for you guys to check up as well. So I know a majority of people are probably going to be watching that, not watching this show. You know, it's kind of related. Don't worry. It's fine. We'll still do the show and everybody can watch this and get caught up on the crypto portion after they get caught up on the Nvidia portion. I should have made the wise decision probably of delaying this show to post premiere of the Nvidia keynote. I realize that now. It is what it is. I had already had this scheduled out, so you know we'll kind of deal with it. But let's go ahead and get into the first topic for the day. Bitcoin miner Bitfarms starts production in Argentina and increases the hash rate to 4.1 exahash a second. The Canadian company plans to open a second mining site in the country, which has low electricity costs next year. Bitcoin miner Bitfarms started production in Argentina, increasing its computing power or hash rate to 4.1 exahash a second. The Canadian miner added 10 megawatts of power capacity to its portfolio, but it aims to bring online a total of 50 megawatts in 10 megawatt increments in one warehouse in Argentina by the end of the year, according to a press release on Monday. Bitfarms started construction of a second 50 megawatt warehouse in the country, which is expected to be completed at the start of the second quarter of 2023, the press release said. Quote, with attractive electricity prices established last year under an 8-year private party power contract, both facilities are expected to lower overall energy costs for our portfolio. Despite rising commodity costs in the energy market, Jeff Morphy, president and chief operating officer of Bitfarms, said in the press release. Bitfarms expects the cost of energy at the 50 megawatt Bitcoin mine that was started up located in Rio Cuarto will be the lowest across the 10 sites in its portfolio. The Argentina expansion also marks the fourth country that Bitfarms mines in, the other three being the US, Canada, and Paraguay. The jurisdictional diversification shields the firm from geographic and climate risks, Morphy said in the statement. Miners that hadn't diversified geographically have sometimes had a hard time getting production up and running after being struck by weather or political events. For example, Marathon Digital Holdings saw 75% of its hash rate go offline after a storm hit its main operation site in Montana. And I do think that this is an important, what can we take away from this as miners, right? Geographical diversity is basically incentivized within Bitcoin mining. And this is important because what do we always talk about in the past, right? This geographical centralization of hash power in China being dangerous, because what if the government does take over, basically the majority of hash rate? What if a government entity tries to do something, right? Or, from the other perspective, a political event where they ban cryptocurrency mining like they did in China. Now, that one's a little more interesting because we could talk about the fact that it looks like, for the most part, nobody really actually shut off in China. They just basically utilized VPNs to mask where they were mining from. And they eventually just gave up on that because it was like, what is the Chinese government going to do? It's kind of like that problem of me saying kind of cryptocurrency is inevitable, and trying to ban cryptocurrency is hilarious because how are you going to control 7 billion people, basically building nodes and all of that sort of stuff? You can't prevent it. At the end of the day, Bitcoin is inevitable. I will give you that, and that kind of hopium at the beginning of the show today. And the good news is, obviously, like, what we are seeing is geographical decentralization, even by individual mining companies. The problem that we have now is corporate. we end up having corporate centralization, right? Large companies that mine, that have control over a majority of the hash rate. And that is an interesting problem to have, right? You have essentially a Bitcoin miners that participate with large entities that control power companies and so on. And while we are getting geographically diverse, we are getting less corporate diversity at this point, right? So we are having some centralization under umbrellas of mining companies, which I think is the other side, the flip side of that coin. But it is good news that we are having a geographical decentralization going on here, even within individual companies. That being said, let's talk about MicroStrategy. They are doubling down. Mr. Michael Saylor is doubling down, buying 301 more Bitcoins, and now holds almost 130,000 Bitcoins. The software company purchased additional coins at an average price of 19,851, which is actually over what the price is right now, which is at 19,059. MicroStrategy bought 301 Bitcoins between August 2nd and September 19th for about $6 million, according to a filing with the U.S. Securities and Exchange Commission on Tuesday. The software company said that, the software company that was co-founded by entrepreneur and crypto advocate Michael Saylor bought the world's largest cryptocurrency at an average price of 19,851 per coin, the filing said. MicroStrategy is a well-known Bitcoin holder, putting the cryptocurrency in its reserves. It now has almost 130,000 Bitcoins, acquiring them for a total price of $3.98, so basically $4 billion, which is basically a dollar cost average of 30,000 at a dollar cost average of 30,639 per coin. At press time, the Bitcoin was trading at 19,138. Now, obviously, Mr. Michael Saylor is super bullish on Bitcoin and cryptocurrency, etc. And to a certain extent, once you're holding this amount of cryptocurrency, I guess you got to just double down. We talk about this on the crypto mining firm. I've been talking about this, more in the private circles, like the Twitch channel, if you want to follow over at twitch.tv/blindrun, or of course on sonofatech.locals.com. But I am doubling down. What do I mean by that? Like, now's the time for me to double down. I'm not going to hop out. I am fully invested. My entire life is surrounded by cryptocurrency and YouTube and Twitch and all that sort of stuff. Now, of course, thanks to y'all and the support that I have, I can kind of bounce around a little bit and be more of a personality and talk about some other things outside of crypto here and there, provided it's somewhat related, right? But for the most part, I am, in cryptocurrency full bore, just as MicroStrategy is, right? And just as Michael Saylor is. So is this a surprise? No, right? If we hit a new low, I expect MicroStrategy to make some sort of purchase, right? So for example, if we see Bitcoin drop to 14,000, I would expect to see MicroStrategy and Saylor purchase more Bitcoin, right? If it hits 7,000, all the way down, as low as it could ever go, all the way down to $0, I think you would see MicroStrategy and Michael Saylor DCAing all the way down to its low. And I'll tell you this, I think as it comes back up, they will DCA all the way back up. DCA meaning dollar cost averaging, meaning you make purchases as the currency goes down and as the currency goes up, thereby basically making your dollar cost average on the amount of Bitcoin that you've purchased averaged out across the whole thing, which is why obviously you can see here their dollar cost average per Bitcoin is $30,639. Clearly, the investment is down $10,000. But, you know, if we look at the stock market, if you look at anything else, this isn't dissimilar from what's happening literally everywhere else, you know, within the markets. So is this a smart move? I mean, I think if I had the money, yes, I would probably do the same thing. Not financial advice, but I think at this point, not only are you kind of expected to, but you're kind of forced to, because you also are kind of, in a way, protecting your bottom line as well, because you are driving that price back up. I think without those purchases, we would have seen Bitcoin stay or even drop below, you know, 18,000. Something along those lines. So it's almost like from Michael Saylor's perspective, kind of preventing Bitcoin from going down further by purchasing a bunch of them. Now, is 301 like, does that really affect it to a greater extent? Probably not. But, you know, we talked about the inflows to the exchanges yesterday, and with the inflows, that's probably the best time to buy, right? It makes sense if you're going to be continuing to go down that purchase path. Now, a token you probably shouldn't be purchasing, you know, not financial advice once again, would be the proof of work coin ETHW, but that doesn't really matter because fellow Binanceans, Binance has completed the distribution of the ETHW tokens to eligible ETH and WETH holders. Now, what does that mean? This is actually interesting because Binance actually honored the ETHW split with people that held wrapped Ethereum within their platform. Obviously, they can do this. Why can Binance do this? Well, because the wrapped ETH that you hold on Binance is still represented by Ethereum that Binance themselves holds. So they can actually feasibly do this. What happened? Well, Binance is a centralized exchange. And so while you do not control your keys or anything, they are honoring the fork. What does that mean? That means that they added ETHW into their exchange, and then they gave you the same deal just as if you were holding it within MetaMask, meaning that they gave you essentially that additional Ethereum, or they copied basically exactly what they did on the main chain, which means if you had Ethereum you were holding within Binance, they gave you the same amount as ETHW. So there you go. That's what they did. So it does say you can users can confirm receipt of these tokens via the distribution page under the transaction history. Withdrawals for ETHW have now been enabled. Now, this is good news in general, right? ETHW does have the ability to withdraw. And this was something that we had talked about before. You know, don't purchase any ETHW at all because there isn't an official chain. Now there is. So what does that mean? Well, from the perspective of like a blockchain purist, you at least now have the capability of controlling your own keys for ETHW. So, you know, if you were so inclined to own ETHW, you have the best way to control it and handle it, which is purchasing it and then putting it in a wallet with keys you control. So we are past the point of previously being warned not to purchase it because there is no official chain to now being at the point to where there is an official chain. So if you wish to hold it, you can hold it on the chain as a public ledger and it is yours and it's immutable, and that is a good thing. Okay. Is the project going to go anywhere? Probably not, for all the same reasons we've talked about before. But, you know, basically copying Ethereum when, you know, Ethereum as proof of stake is still fully functioning means that all the developers are staying on Ethereum, which means ETHW now has no development, which means you have a bunch of dead tokens, etc. on the ETHW chain at the end of the day. Here's some other notes. The snapshot for the ETHW distribution was taken at the ETH mainnet block height So for you to actually get anything, you have to have been holding the Ethereum in Binance at the actual mainnet block height of the 15,537,393. If it was after that block height, you know, it doesn't count, right? So that's one of the notes. BETH holders are not eligible for the distribution of Ethereum proof of work tokens. They will notify users in a further announcement if there are any changes to that. Please ensure that you have not selected hide small balances to view your token balance sheet in the spot wallet. And where any discrepancy arises between the translated versions and the original English version, the English version shall prevail, they say. So if you're worried about that, essentially that is where we're at. So, you know, it's a little weird. Like when we talk about this, you basically have a chain that is kind of from the get-go dead, right? Like Ethereum Classic has more developers working on projects for it than ETHW. And while ETHW technically has, you know, every single upgrade that Ethereum got, even all the way up to EIP 1559, which is arguably a negative for the chain, it doesn't have people, you know, supporting the project still on it. So it seems kind of like dead on arrival, in my humble opinion. Now, that's not financial advice, and maybe there's some sort of, you know, move that will make it worth more in the future. Who knows? I don't really have that from an investment perspective. But, you know, I would still lean towards Ethereum Classic. And I think a majority of miners are also leaning towards it. And, you know, regardless of what you think, it's clear that miners do influence the networks to a certain extent. So I think that's relevant. And then, of course, developers influence it, right? Like if there's no projects on the chain, then there's no reason for users to use that chain. And, you know, I think that there's been an uptick in development on Ethereum Classic. And part of that, of course, is due to the investment that we've seen from Bitmain, etc. But 10 million's kind of a drop in the, you know, what do they call it? I don't know, a pebble in the pond. It doesn't make too much of a ripple effect in comparison to, you know, something like Ethereum and the amount of inflow monies that are going into that. But, you know, maybe at the end of the day, somebody does start looking more at proof of work versions of Ethereum, because the SEC claims now that the US government has jurisdiction over the Ethereum network. This is absolute insanity. Now, we've been saying this since the beginning. Why is this, right? Well, you have Ethereum moving to proof of stake. Proof of stake doesn't pass the Howey test. And not passing the Howey test means that you go from a commodity, which technically Gensler and the SEC said Ethereum was pre-proof of stake, right? To now being a security post proof of stake. And then on top of that, a majority of your consensus is run on AWS, which is an Amazon service. And that is going to be regulated by a U.S. company, which is a U.S. country, or which is then regulated by, you know, U.S. government. And then you have this interesting position where now, obviously, the SEC kind of does have the ability to do this. Now, you know, at the end of the day, can it enforce it? That's a whole other question that we could get into, but let's talk about this. This is a report from Watcher.guru. Ethereum has been one of the most talked about cryptocurrencies over the past few weeks, with major updates like the merge taking place. Apart from this, the network's transition into proof of stake has been fueling rumors about ETH being categorized as a security. Now, further strengthening this argument, the SEC, in a lawsuit against crypto influencer Ian Bellina, claimed that ETH transactions automatically fall under the U.S. government's jurisdiction due to the majority of the nodes being run in one country. What the f*** did I tell you guys was going to happen? And everybody was like, no, that's ridiculous, blah, 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 and Amazon's in other countries and blah, blah, blah. The exact reasoning that I said this would happen is happening. And it's extremely frustrating that nobody was concerned about this beforehand. Once again, I'm going to reiterate this. ETH transactions automatically fall under the US government's jurisdiction due to the majority of nodes being run in one country. I mean, at this point, what did they do? I mean, is this, like, how much of this is just planned out from the get-go? I feel like I need to throw on a tinfoil hat. What do we see happen? Like, bam, bam, wham, bam, thank you, ma'am, like all in a row. Right before we have the merge, the White House comes out and says we want to work on banning proof of work. Why is that? Because proof of work is, at its base, creates a commodity and prevents it from being regulated as a security. Right after that, Ethereum moves from proof of work to proof of stake, which is then followed up by the SEC clarifying that proof of stake is a security and not a commodity, followed up by the White House releasing their plan to essentially deploy a central bank digital currency and start regulating proof of work more heavily. In addition to that, they say that their CBDC will directly integrate with some sort of blockchain that will provide some sort of asset tracking. What is that asset tracking? What's the most number one highest rated blockchain for asset tracking right now? Well, that's Ethereum. So what do they got to do right after that? Guess what? Bam, let's throw US government jurisdiction right onto Ethereum. What do you end up with at the end of the day? A CBDC controlled, of course, by the federal government that then is tied into Ethereum for asset tracking, and Ethereum is completely controlled by the US government. Taking my tinfoil hat off now, let's continue the article. Bellina was sued for allegedly offering unregistered tokens. He was caught in trouble after he failed to register his project as a security before rolling out an initial coin offering in 2018. The crypto influencer outrightly denied these claims. However, the crypto community is currently speculating on the SEC's massive statement in the lawsuit. So why is this important? Because yes, we are talking about an individual situation that has happened here, but the precedence that's being set within this court case and within this lawsuit is the important part, right? And it's hilarious too, because this is according to the 69th paragraph. The lawsuit stated that it had the right to sue Bellina because the SEC had jurisdiction over the Ethereum network. It was reported that a variety of US-based investors participated in the Bellina curated investment pool. A network of Ethereum blockchain nodes further verified a number of ETH contributions. Due to this, the SEC stated, quote, ETH contributors were validated by a network of nodes on the Ethereum blockchain, which are clustered more densely in the United States than in any other country. As a result, those transactions took place in the United States. Additionally, it should be noted that at the present, 42.56% of, or 340 of the 7,819 Ethereum nodes reside in the US. What is this number in relation to as well? What is that 42%? That 42% is all AWS, my friends. And the centralization didn't start, of course, with the actual move to proof of stake. It started way before that with the release of the beacon chain, right? So inevitably, this is something long in the making that is coming to a head now, which is why they can set this precedent from back in 2018, right? This is why they can continue to do that. Will this statement take a toll on the Ethereum network is the question. The Ethereum network has been dealing with immense backlash following the merge. As mentioned earlier, some were suggesting that the network would fall under the SEC's pure view, as it would now be considered a security. A few others, on the other hand, were taking digs at ETH's level of decentralization. Amidst all of this, the latest statement made by the SEC would be detrimental to the network. Even though several legal professionals noted that the complaint's phrasing would have no legal significance, it would nevertheless be noticed. So some people are saying it wouldn't have legal precedence. So how is that? No, I mean, at the end of the day, like Adam Cochran says here, rather than take on a simple case, the SEC is trying to use this to set precedent, claiming that all of crypto is under the SEC's jurisdiction. No, it's trying to claim that all of Ethereum is under SEC's. I mean, I disagree. I think it's specifically because, as we've seen, they've already said that Bitcoin was a commodity. Now, initially, they said that Ethereum was a commodity too. But now with this move, and then because of the way the nodes are centralized within the United States, the SEC is that they're saying essentially that they have control over the network. Oh man, guys, this is absolute insanity. Obviously, we're going to be covering this on this channel and following it. I'd like to hear how you guys feel about this. Is Ethereum like a lost cause at this point? Like, is it one of those things where you just say, okay, well, this is done. Obviously, this experiment is over. You know, we have fallen back into traditional finance. You know, institutions have now taken control. The rich will get richer, and this does not help the working class whatsoever at the end of the day anymore. Or do you think it still offers some benefit? You know, I still have to sit there and look at, like, basically without Ethereum, you didn't have the ability for the Argentinian, there, I don't know, something like that. I remember I looked at it and then now I got confused of what you call them. But the residents of Argentina utilizing, basically the Ethereum blockchain to be able to move their funds into stable coins when they were not allowed to, unless they were extremely rich in the area, do so otherwise. I think a lot of that was obviously powered by Ethereum. I think there's still use cases here. But I do feel like the SEC and the governments, the US government in general, feels that, the position that Ethereum currently is in means that they have some control over it. Now, how the SEC and the US government feel about having control over it and whether or not they actually have control over it are two separate things as well. Once again, I go back to kind of that idea that, like, you're not going to be able to regulate blockchain. However, when we get to proof of stake, it becomes a lot easier to regulate blockchain, especially if a majority of the nodes and the consensus are run on a platform that is controlled by the US government, such as AWS or Amazon Web Services. At that point, then yes, I think you do have more control over the network. If this was a proof of work scenario and a majority of the proof of work was being done on Amazon or AWS, etc., I guess supposedly they could use that to 51% attack the network, but it'd be a lot more difficult. They definitely couldn't use it to censor transactions, because as soon as they started censoring transactions, Joe Schmo with a USB stick mining Bitcoin could just validate that sanctioned transaction or that censored transaction, and boom, it's good to go. But, if AWS or Amazon decides to start shutting down nodes or start censoring transactions, I think it's a lot easier at this point than it is on proof of work. So this is really interesting. Definitely gonna have to follow it. Definitely gonna have to sit down and dig into specifically how Ethereum's proof of stake network works. I think that's going to be extremely important, and understanding that as we move forward. But I think we have a pretty good grasp on it. Why do I think we have a pretty good grasp on it? Well, everything that we've said was going to happen has happened so far. Which is, at this point, obviously not ideal. You would rather be wrong in this situation than correct, right? That's how I feel. I would rather be wrong and proven wrong in this situation than being proven correct, because I think for cryptocurrency in general, obviously, I want that to succeed. I would actually even want Ethereum to succeed, be decentralized and not controlled. But if we look at what the truth is, it's just the fact of the matter is this has become centralized and put under the control of the US government. At least the US government thinks it has control. And the thing is like, if the U.S. government thinks it has control, they will do things to establish that control, right? And that's been proven out throughout history in the way the U.S. reacts, especially in financial terms. But it's okay. If it's the apocalypse, the tech elite have an escape plan, boys. It's fine. If all of this is really coming to a head to where the U.S., in the world, to a greater extent, is controlled and put into a position where, you own nothing and are happy, meaning not happy, but just the top 1% are happy. Well, the top 1%, they have escape fantasies. And this is a really interesting book. This is kind of some excerpts from it. Kind of a fun piece to end the show with today before we get into mining profitability or the lack thereof. How the tech elite plan to escape an apocalypse of its own making. An excerpt from the legendary tech reporter Douglas Rushkoff's latest book, Survival of the Richest, Escape Fantasies of Tech Billionaires. That does look like the red planet Mars right there, doesn't it? So he says, I got invited to a super deluxe resort to deliver a speech to what I assumed would be 100 or so investment bankers. It was by far the largest fee I had ever been offered for a talk, about a third of my annual salary as a professor at a public college, all to deliver some insight on the future of technology. As a humanist who writes about the impact of digital technology on our lives, I am often mistaken for a futurist. And I never really liked talking about the future, especially for wealthy people. The Q&A sessions always end up more like parlor games where I'm asked to opine on the latest technology buzzwords as if they were ticker symbols on a stock exchange. Artificial intelligence, virtual reality, CRISPR, etc. The audiences are rarely interested in learning about how these technologies work or their impact on society beyond the binary choice of whether or not to invest in them. So he says he flew business class and they gave them noise canceling headphones, blah, blah, blah. And so he composed a lecture on his MacBook about how digital businesses could foster circular economic principles rather than doubling down on extractive growth-based capitalism. There we go. Sorry, excuse me, guys. My brain just went and locked up. Painfully aware that neither the ethical value of my words nor the carbon offsets I had purchased alongside with my ticket could possibly compensate for the environmental damage I was doing. Oh my God. Now, obviously, this is funny because we're going to be getting a perspective from somebody that is head over heels deep into the traditional narrative, right? Obviously, he comes from essentially a perspective that is drawn into the environmental portion of this because, well, he was indoctrinated to think so. We could talk about, this as a perspective, though, not as necessarily wholeheartedly the absolute truth. I just want to make sure that we understand where he's coming from. A limo was waiting for him at the airport and he took it straight to the high desert. Let's get into what he's getting into. I really want to see what's going on. Maybe this isn't what I want to get into today. I thought we were going to read about what they said, but I'm just going to get into the book and bring that to you guys. Yeah. I'm done with this. I don't want to do it. It doesn't look like he's actually talking about the book. I should have read this and vetted it better. I saw it right at the end and I was like, this will be cool, but we're just going to pass on it. Let's talk about cryptocurrency profitability. And then we're going to finish the book, which is Survival of the Richest. And we'll talk about that later on. Okay, so where are we at with Caspa? Oh, wait, hold on. We got to run the ad. I'm getting distracted today, boys. Wow, today's show is just like brain farts all over the place. I apologize, boys. Hopefully you're still learning something. Clearly, everything's a little depressing right now, so we'll get into that into the Q&A too here in a little bit. I think today's video, I got to get it edited, but it's going to be a little depressing. I think this is just kind of the point that we're running into, unfortunately, but I think that there is still light at the end of the tunnel, so I'll try to give you guys that hopium at the end of the day. So stick with me. Tonight's video, like I said, is going to be a little depressing, but I think after that, you'll see that there is some light at the end of the tunnel. Let's go ahead and run the ad and then get into mining profitability for the day. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Alrighty, so welcome back, ladies and gentlemen, boys and girls. So yesterday I went out to the farm. A vlog is coming out later, but long story short, we only have 3 GPU rigs running, and they're running all on Casper right now, with a plan later over on twitch.tv to switch over to another coin that we'll be talking about later on in the week. But that being said, what are we looking at, right? We are looking at essentially... let's go ahead and go through this. Let's start on the 19th. We've only found a few blocks today so far, but on the 19th, we found 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 blocks at $1.60 a block. Which comes out to $27.20. Now, here's the thing. I am running at essentially 14.5 cents a kilowatt hour based on my previous bill, which meant that everything that I was running, and we'll talk about it more in the thing tonight, was going to cost me $30. So close, right? $30 a day. We made $27 in the day. So close to even at 14.5 cents a kilowatt hour clearing. So what have we done? Well, basically shut everything off that was not efficient. Now, I think that I still have one rig that I can bring back online that's efficient enough to handle this. But essentially now we'll be testing over the next day or two, and I'll let you guys know if compared to what I'm paying in power cost is going to break me even. So what are we doing? We're just min-maxing, right? We're taking more rigs offline. I think there's a couple rigs that have some 3070s in them that I need to actually move and turn those back on, but take a couple cards out of them, right? Some stuff like that. We'll be kind of covering it. And then we got other cards that we just need to get cleaned up. So we'll be doing that as well. So unfortunately, frankly, I don't have a shit ton of time. And then keeping up with YouTube and content creation means that it's really hard to also get out there, do stuff. I'm just going to be trying to work. Hopefully, I got to talk to the wife and say, hey, look, I can't do any of this crap anymore more around the house, because I got to get out to the farm and get some stuff worked out. We got to make sure that we're getting content out for you guys as well. And primarily the content's the most important, obviously, because right now the only job I have is the content, because clearly the mining is not all I got to get to the mining to do right now is pay for itself. But, we're barely covering, we're hopefully covering power now with optimizations, but that doesn't mean that we're not covering rent, right? So that $30 a day is power only. right? So we were losing $3 a day just after power, right? That wasn't including the rent that we had to cover as well. So that's kind of where I'm at as far as that's concerned. But, you know, we'll see where we're at with some other coins. There's some spec mining that we'll be getting into, some stuff like that, but we aren't going to be running any low efficiency coins as well. So there you go. Now, as far as dual mining, as far as that goes, first of all, dual mining ERG, not a good idea because of the difficulty of ERG and the increase in power. Not worth it. And the decrease in the amount of Caspa hash rate that you get over that. In addition to that, no, there's not in addition to that. That's it. The increase in power and heat, I guess in addition to that, I'm in Texas and it's still hot and it won't run well at all. So yeah, sure. You know, if you're in a spot where maybe I think in general, dual mining doesn't make much sense. I think you make a lot, you find a lot less blocks on Caspa when you're dual mining, in my experience. And with the difficulty problems on Ergo, I just don't think it's worth it. Let's look at the hash rates or the mining profitability for the RTX 3090. They did fix the Caspa hash rates, which is good. Let's go ahead and make sure the ZIL hash is correct at 110, Kapow at 55, ProgPow at 55, and Firo at 55, and calculate that baby out. And that was at 15 cents a kilowatt hour. Let's go back to our 10 cents a kilowatt hour so we're staying on track. At 10 cents a kilowatt hour, nothing is profitable right now. You have some that are showing $0, but it's pretty much pointless to look at that. I guess you lose the least amount of money on Rio at 14 cents. And, you know, you lose 14 cents a day running on Rio at 10 cents a kilowatt hour. As far as what to mine goes, we are seeing that nothing is profitable right now. That is pretty much how it goes. So, what do you got to do in this situation? Well, we'll be talking about a little bit over on Twitch and a little bit over on Locals a little bit later today. But now is when you essentially spec mine. So you go find coins that aren't listed on exchanges yet or very newly listed. You at least, so there's two, I guess there's two different, there's spec mining, and then I don't know what we would call it. So spec mining I usually classify as mining something that has never been listed on an exchange. So it doesn't have a price to convert it to. There is this kind of step in between, which is the coin technically has a price, but it's not listed on any calculators, right? So it's not listed on what to mine. It's not listed on, you know, 2CryptoCalc, etc. And in those cases too, you can have an advantage as well. In fact, you can probably calculate it out yourself still, which is advantageous, right? But, you know, at the end of the day, the rest of the community doesn't know about it, right? So I don't know what step of like spec mining we would call that, but maybe we call like, be like spec mining layer 1 is like no exchanges at all. Spec mining layer 2 on exchanges, but not on any cryptocurrency calculators. But those are the two kind of projects that you're looking for. And I'm going to be trying to cover those. The problem with covering those is that if we talk about them on a large show and then thousands of people move over to them, then we have a problem, right? So from a responsibility perspective, and this is kind of what I talk about a lot, it's very difficult, I think, as a cryptocurrency influencer. I already have like moral objections to, you know, pumping a coin. However, being an influencer means that we're going to pump coins. That's going to happen, right? But trying to be as careful about that as possible. Especially because what we're starting to see right now is a bunch of people take advantage of miners. and so we're seeing, projects that are basically, in my humble opinion, unoriginal forks that are trash, taking advantage of the fact that miners aren't profitable and getting them miners to come in and mine them and be a part of just so they could spin up a quick, easy project in hopes that they pump their coin and are able to dump it onto the network. So, I constantly talk about coin A, talk about coin B, and the fact of the matter is I'm going to try to be as careful as I can about that from that perspective, right? From the moral perspective, but then also from the perspective of the fact that if I talk about it, it'll become unprofitable as well, right? I mean, eventually, right? I can make some of the right calls, like we made the right call on Caspa, and we're profitable, probably for a whole week after the merge, right? Almost a whole week, we were profitable on Caspa. We made the right call. I mean, a lot of the problem there, though, is, which is great. I think that it's great. The reason why it was profitable is because every other cryptocurrency mining YouTuber laughed at me when I said it on the channel, and very few people followed over, right? We could see the day after the merge, no hash rate moved over to Caspa, and hash rate didn't move over to Caspa until a few days after, when people realized it was profitable. So, luckily in that case, we just kind of got lucky that people were wrong and mocked it, frankly, right? Which was kind of why I was going to mine it, right? Now it has the advantage of still being able to find a lot of blocks, and you can still get lucky on Caspa. The other thing that made it lucky was being able to solo mine it, right? Because solo mining Caspa has massive advantages over even solo mining other things, because you can still solve blocks that are older blocks, meaning you can still kind of have this weird advantage in Caspa for solo mining it. So that kind of helped as well. But now we're at the point to where that's kind of gone, right? Technically, I'm still doing better than what's being reported on what to mine. No, we're doing a lot better. We only lost 10% of the power. We basically were at 90% of paying for power at 14 cents a kilowatt hour. While if you had looked at what to mine said for that, that's not true. And a lot of that I think has to do with if you're mining to a pool. And I think for the most part, like I said before, when we get into mining right now, some of the things that you need to take into account is you need to be building your own nodes to give yourself an advantage. And there's another reason why building your own nodes gives yourself an advantage, because even if it's a coin that has, there's two separate parts, right? So it could be a coin that already has a pool, right? Well, what does solo mining give you? If you can, right? If the coin's small enough and you have a large enough farm to still solve blocks, which is a whole other point that we have to get into too. But if it's a small coin, even if it still has a pool, if you build your own node, not only do you have lower latency, meaning giving yourself an advantage from a network perspective, but you give yourself an advantage of not paying fees for the pool, which means you make some extra money there. And we really are talking about min-maxing. But in addition to that, why is it important to build nodes and understand that? Well, the more nodes you build, the more familiar with nodes you're going to be. And in the case that you have a spec mineable coin that's not listed, you're going to be able to build your own node and be able to mine to that before anybody else can, because a majority of the people that don't know how to build their own nodes are not going to be able to truly spec mine. And you being able to truly spec mine will be an advantage. So I think that's really what we're looking at here. And I mean true speculative mine, build your own nodes, go from there, right? Let's look at what's going on with all the hash rates. We got Bitcoin here. down, or I guess not really down, 240 exahash a second. I guess it's a little down from the 254 that we saw a couple days ago, but 240 exahash a second. Obviously, it's down 15% over the past week, unfortunately. We have no Ethereum anymore, but we do have Ethereum Classic to look at. So Ethereum Classic is at 192 terahash a second. It never did quite suck up all of that hash rate. The difficulty has come back down. And this is kind of the game that we're going to play, but it's also down 23% over the past week. A lot of that's going to be selling pressure from the miners, and I'm not necessarily sure that that goes away. What else do we got? We got Ethereum proof of work at 37 terahash a second. And Ethereum Fair, which is Justin Sun's version of the ETH POW, supported by F2 Pool apparently now. It had a huge spike at the beginning and then completely fell off. It's only at 6.1 terahash a second. And I haven't really looked into this one yet. We just found out about it yesterday. So I'll try to look into that this week. I have a different coin that I'm going to be talking about first, though. But we'll definitely get into Ethereum Fair and Ethereum Proof of Work, how to mines. Even if we don't support them, we always want to make sure that we have as many how to mines as possible up for you guys. So we'll take a look. Interesting that it's on F2 Pool. And remember, their airdrops were really interesting because it was based on how much Bitcoin you held, basically, in Polo Nex. Pretty scammy, pretty gross at the end of the day, to be completely honest. Let's take a look at Flux, see how it's holding up. It's at 8 mega solutions a second. It's lost 18% over the past 7 days. It did go back down below $1, unfortunately. Once again, huge spike up in difficulty and hash rate, or difficulty, and now the the hash rate's probably going to settle in here, and then we'll see where the difficulty settles in and what profitability ends up being. And then we got Ravencoin, of course. And Ravencoin coming in at 19.62 terahash a second. Neoxa at 2.5 terahash a second, which of course we had that huge spike that people were worried about. This does pose a problem because it shares the same algorithm as Ravencoin, and if somebody wanted to execute another 51% attack on it, there's really not much holding them back. We got 20 terahash a second over on Ravencoin right now, and that is 10 times the amount of hash rate that's on Neoxa, and all you need is to be double the hash rate on Neoxa. So, hopefully that doesn't happen, but I think that there's a pretty strong risk of it happening on Neoxa, especially with kind of the behavior we've seen in the past from other chains. So I'd be careful on that one. They already have like extremely long confirmation times to exchanges, meaning your liquidation as a GPU miner is already kind of rough. And then, of course, Ergo, which we have to have some, what did my dad always say? It's maybe time to have a come to Jesus meeting. And you guys know I love Ergo, but we have a big problem on Ergo, and the problem is a delayed difficulty adjustment. This creates more of a problem than I think the developers are admitting. We mentioned this to CW, said that that's something that needed to be looked at pre-merge. Of course, they didn't look at it pre-merge, and then the exact thing that we said was going to be a problem, post-merge, well, it's becoming a problem post-merge, okay? And this doesn't necessarily spell out doom and gloom for Ergo, but it does mean that it's not going to maintain the security that needs to be maintained on the chain, in my humble opinion. Why is this happening? Well, you basically have a huge swing of things that happens here, and it's going to be more pronounced post-merge now because we have more hash rate that's being played around with on the network. So what we can show you here, obviously, is this initial increase of hash rate to 215 terahash a second. Absolutely massive. Along with that comes this massive difficulty spike, right? It actually adjusted quite fast. Why does it adjust quite fast? Well, due to the delayed difficulty adjustment, it shoots up faster because basically the difficulty is staying low. But when a whole bunch of hash rate comes on, it increases the speed of the block times. So as opposed to being 2 minutes per block, it had sped up to 40 seconds per block, which meant the difficulty adjustment did happen a little bit quicker. But what does that mean? That means you're going to adjust quicker to the point to where it is unprofitable. However, on the inverse of that, what happens when the difficulty is high and miners drop off? Well, the block times slow down. So right now the block times have slowed to a crawl. So the difficulty adjustment coming back down as network hash rate drops off is going to be a lot slower. The difficulty is going to remain extremely high, and it will remain extremely high for an extended period of time. In fact, because of the way the delay works, it could be 300% longer than it typically is at 2 minutes, meaning as opposed to like previously where it was a day and a half for the difficulty to come back down, we are now talking about 4.5 days before the difficulty comes back down and adjusts back down properly. This is a problem on the Ergo network that needs to be resolved. And unfortunately, we're getting a lot of pushback on the socials from the Ergo devs saying that this is okay. This is not okay. You can't have block time slowing down like that and speeding up like that. And you can't have miners jumping off and playing, basically gaming the network, right? I want Ergo to be successful. I can see how to game the network. If I can see how to game the network, every other miner can see how to game the network, and it's not good. So what happens next, of course, what we'll see eventually is that this difficulty will drop back down, and then we'll see this hash rate come way back up, and big farms will basically manipulate the fact that they can get paid out more for a little bit longer, and then it'll drop back down. Hopefully this gets resolved. I'm going to shine light on it until it does get resolved. And I wish the dev team the best. And I hope that it's a little bit more acknowledged. What I was seeing on Twitter this morning was a lack of acknowledgement. I feel like when we talked about it previously, it was also, kind of shrugged off a little bit too. So I'm just hoping this gets resolved because, if we expect Ergo to be successful, it can't have this clear gamification to the hash rate on it. All right. Let's talk about ASIC miner profitability. All the profitability is in the ASIC miners these days, boys. You got the IB link at the top, though, at $31 a day. In the number second spot, we have the Antminer L7 on Script, of course, at $16.16 a day. And then we have the IB link once again, mining that Cadena. That KDA is only $2 a day, actually. It's on the Blake algorithm that's doing it. And then we got the iPolo G1 in fourth place, mining Grincoin, which you can also mine, of course, with GPUs. And then you do have the Jasminer X4 mining Ethereum Classic, it looks like, at $8.80 a day. So technically profitable on Ethereum Classic if you are running essentially ASIC miners still. Along with the iPolo V1 taking 7th place. The gold shell KD6 at $6.25 a day. And then scrolling down from there, we have the KD5 at $3.20 a day. And the S19 Pro at $2.28 a day. Margins are getting very, very thin on the Bitcoin mining side, as expected. But, you know, there is hope if you want to move into ASICs still. But keep in mind, of course, you move into ASICs. If the same thing happened, you know, with Ethereum and GPU mining on the ASICs, you still have the same problem, except now you don't have anything to resell. Of course, the GPU mining, the GPUs are dropping in price. It's kind of interesting. I think more right now, it's less the GPUs dropping in price and more the GPUs just not selling, right? To the point to where I think there will be extremely good deals of people just trying to get rid of their GPUs for very, very cheap, but you're still going to be hunting for them. So, you know, there will be the miners like myself and maybe y'all that are just turning off and keeping all of your equipment, because why sell it at such a loss? If they've already paid themselves off through the bull run, so why sell them? I'm going to hold mine. You know, I don't see a point in selling all of my equipment. There will be the miners that do that. And then there will be the miners that are like, we're out of the game. I just need to make a few extra dollars. Let me sell everything I own. And then that's kind of what you're looking for, right? But preferably newer cards, RTX 3000 series, RX 6000 series. That's what you're looking for. You don't want to get yourself into an efficiency issue, because remember, even though Polaris GPUs did maintain through this whole entire bull run, they were still getting slaughtered pretty good by the ASICs in the new 3000 series, and they don't have a place in the market now, right? So you don't want to be in a position where you're buying a whole bunch of RX 5000 series cards and then being in a position next bull run where they're not viable, right? And that's coming from somebody that owns quite a few RX 5000 series GPUs. I'm going to take a quick bio break and then we'll get into questions and answers. We do have time for questions and answers today, so I'm super excited about it, but I do have to take a bio break real quick. It's been a long morning. And then we'll get into questions and answers and then take a look and see what we can see about the RTX 4090. So give me 1 second. We'll run the ad while we go, and we'll be right back. Boom. Alrighty, ladies and gentlemen, boys and girls, let's get into questions and answers. Remember, super chats are never required, always appreciated first to be answered. Tagging at blind or at son of a tech, excuse me, will highlight the message orange and make it easy for me to read. And I hope everybody's having a good day here. Billy says, at son of a tech, why do you use centralized exchanges instead of P2P exchanges? Why do you use centralized exchanges instead? Well, if you want to, so you would utilize, well, and I wouldn't use like, you mean essentially DeFi or decentralized finance or whatever. I do use a lot of DeFi. But once you get to the point of basically wanting to extract to US dollar, you have to use a centralized exchange, right? So that would be the reasoning why. Billy says, ask Samatech, asking the same question twice is, please don't do that. Brainy says, ask Samatech, Nvidia is already having meetings about holding stock to keep prices up. They were happy with the lack of supply. They want more of it. Yeah, the thing is like, that's not going to happen anymore, right? Like, cat's out of the bag. That's not going to happen anymore. Daniel says, ask Samatech, don't worry, you can just buy an ant box and put it in the backyard. An ant miner? Anonymous Miner says, ask Samatech, I was able to get 1060s at 169 megahash a second at 60 watts for Caspa. Would that pass your bill, and would you like the overclocks? What you're looking at there is, right, we can calculate that out. I don't think that that's quite going to do it, right? Yeah, that's 2.6 megahash a second. That will not pass the bill. We're looking at, I mean, 3090s I have at 5 megahash per watt. 3070s we have like at 4 to 4.8 megahash per watt. You're really looking at 4 megahash per watt and above on the 30 or on that to really clear it. Pranav says that I can never pronounce your name, says that the 4080 and 4090 just got released. So they just dumped them today? Let's go look at the Nvidia. Premiere. I don't see them really talking about much yet. Let's see. Lewis says, ask Samatech, when is the new version of the 3060 Ti being released? You mean a 4060 Ti? How would I know? Mine something says, ask Samatech, have you switched to locked core on Caspa? Yeah, lots of hash rate, but efficiency is much better. What's your efficiency at? Are you hitting 4 to 5 megahash a second? Or megahash per watt? Mine something? I have not switched to locked core. Jared says, ask Samatech, just buckled down to learn enough to build the CAS node. Awesome. Glad you're doing that. I don't have any documentation on how to work the wallet. I can work on that though.
Will run on many options of Nvidia GPU instance.
And can you rewind on this? I'm not seeing. I'm not seeing an actual announcement for the 4080, 4090 here. Let's see. Hugo Down says, ask Samatech, do you think it's suspect that Justin Sun is saying that 90% of proof of work will go bankrupt? Well, Justin Sun didn't say that. Chandler Go did. And no, I don't think that that's suspect. I think that he's accurate. Kevin says, ask Samatech, I did accept the job with Core Scientific. You start in October. Super excited. Congratulations, dude. Leia Chow says, ask Samatech, what to mine is currently showing AMD 5700 and 6800 profitable on mining Grin. Does that seem accurate? I'd have to look. I know that Grin is currently profitable. The thing is like Grin does have an ASIC. So I don't know if that prices you out, right? Also, Grin is very interesting to mine. Crypto or Die, thanks for the $5 super chat, says, Ask Sumatech, what about proof of work chain? Only emission is NFTs, no coin. Since NFTs are art, would that get around the issues with the US government? No. I don't know what you're exactly what you're asking. But I mean, technically, any token on a blockchain would still have the potential of being a security. So while the actual L1 of Ethereum wouldn't be a security, everything that's on top of Ethereum could be, or a lot of things on top of Ethereum could be considered a security, like ApeCoin, for example, right? ApeCoin is somebody buying it with the intent. It doesn't pass the Howey test. Somebody buying ApeCoin based on the work of another person. Jared, thank you for the $5 super chat. Says thanks for all the work. Yes, sir. I'm not seeing the slides. I'm looking for the slides on the 4000 series for you guys. I'm seeing a lot of stuff about cars. A lot of stuff about cars. Okay, I got it. I got the slides, boys. All right, here's the first slide. RTX 4090, 24 gigabytes of GDDR6X. They say it is 2 to 4 times faster than the 3090 Ti, and it's going to run $1599. That is expensive, expensive, expensive. All right. Where's the 4080? Oh, and then the 4080 is, we'll get it. We'll get it. And then the RTX 4090 or 4080 will be starting at $1199. 12 gigabytes of GDDR6. So, I don't think that these GPUs are going to sell. I mean, like, that's extremely expensive, isn't it? And there's a huge flood of used GPUs coming onto the market, and we're going into a global recession. They're going to sell like 5 of them to all, like, you know, they'll sell one to like Jay's 2 Cents and Paul's Hardware and Hardware Unboxed. You know, the YouTubers. Oh, wow. As far as mining goes, too, it does sound like the memory was... Oh, sorry. The 16... There is a 12 gigabyte model that doesn't have specs yet. But remember, that model was rumored to only have a 192-bit bus. Yeah, Pranav, I caught that. It didn't say how much the 12 gigabytes going to be, but remember, it's a small bus. So from a mining perspective, it looks like we are seeing exactly what we expected, meaning we're seeing, like, I don't know, like smaller buses, less memory bandwidth, where, you know, I mean, in an ideal world as a miner, what you see is the gamers selling their 3090s and 3080s and upgrading, and then you get a better memory intensive GPU for cheap. But that's not, see, the problem is that would have been the case if the 30 series launched during a bear market, right? So now what we have is essentially the 40 series launching during a bear market, which means all the 30 series are pretty much in the hands of miners. So you got to hope that miners are going to sell them, but miners aren't, I don't think, here's the deal. I don't think as a miner, I would sell my 3070 to upgrade to a 4070. It doesn't look like, that would be a good move. New World Music says the 12 gigabyte version is $8.99. In the slide, it doesn't say that here. But maybe it, I don't know where you're getting the data. Maybe you're getting the data off of like Newegg or something. Like, is Newegg listed? Are these listed now? I'm not seeing them listed anywhere. It's 30 series. I don't see them listed anywhere. Oh. The 3060 Ti release. Oh, Luis, I know what you're talking about. No, that is for OEMs only. That won't be released as a separate GPU. That'll only be... They are technically better for mining, but they are only in OEM builds, pre-builds. So like Dell, HP, etc. You won't get access to them outside of those. Andrew says, Ask Tech, the RTX 4090 Ti, 48 gigabytes, 600 watt, uses more power than a few of my rigs. Yeah, and you got to upgrade that power supply too. As well. Hold on, guys. It sounds like I have a knock at the door for some reason. Okay. Oh, somebody was home. I didn't have to. Well, I don't know, boys. This seems disappointing, to say the least. Do you guys have any more questions? If you don't have any more questions, I'm going to be moving over to Twitch and working on my mining farm a little bit. I like the joke about the Titanic edition. I already showed the 4000 series announcement. I don't see any sales, I guess, unless it's being sold on the actual deal. Ted says, that's Tech. Watch Gamers Nexus new power supplies are having problems melting wires. I mean, that's expected, right? Like, this is a new one. They're going to have to increase the gauge. I'm surprised the electrical engineers didn't catch that, but, you know, I could have told them that in my sleep. Hey, guys, you need a larger gauge. I wonder if they're just so stupid they made the gauge number larger instead of smaller. They're like, that's a larger gauge, right? Let's go from 18 to 24. No, you dimwit. So it happens when the electrical engineers go to woke colleges. They can't build a power supply for RTX 5000 or RX 4000 series. That's what happens when you start teaching Common Core math, boys. It's just jokes. I'm sure liberals can do math. Chill out. Let's see. How long should you hold your equipment before selling? If you hold your equipment, I don't think you can ever sell, right? I mean, good news is I think Nvidia just pretty much locked in the fact that your 3000 series are going to be hold value. Right? At the end of the day. I think they just basically confirmed that your 3000 series is going to hold value. All right, so official specifications for the RTX 4090. It's still a 384-bit bus. It does look like a 450 watt power requirement. And you will need either 3 8-pin PCIe's or a single Gen 5 cable. So really not worth it from the memory intensive perspective side of things for mining. Probably going to, I mean, be good on Caspa, that sort of thing. So there you go. Emil says, that sound attack is your ETH and ETC address the exact same? Yeah, it is the exact same. That's how MetaMask works, right? So your address, like through MetaMask, like all of that's the same. Interoperability, right? So that address is the same for, you know, ETHW and Ethereum Fair as well, for example, right? It's the same for my BNB as well. So my Binance... Like, if you guys have a MetaMask, you know, keep in mind, like, that address is the same for everything you use MetaMask with. It's cool. It's pretty cool. All right, ladies and gentlemen, boys and girls, we're going to end it over here. I'll be live on Twitch in a little bit. I'm going to be mining something new. So if you want to know what I'm going to be mining, head on over to twitch.tv/blindrun, and you will be able to find out what I'm going to be mining. I will be going live over there in maybe about 15 minutes. So at 11:30 a.m., we will be live on Twitch mining something new. Go over to twitch.tv/blindrun to find out what I'll be mining. Thanks for watching, boys, and I will see you next Tuesday.